Welcome to TradingLounge and the US stocks for Friday, April 29. So I just want to start with the Nasdaq, the triple Q here. We're looking for a rally, and it looks like it's complete now in terms of an A wave, a B wave, and a C wave here. I haven't checked the actual Nasdaq yet, but I'll do that in the next video. But yeah, look, in a nutshell, we were looking for wave 1 and back for wave 2, so we've got our correction here now. So we need to still confirm the next move down in terms of our trade on this one here, where we got lucky and got short at the top here, and we exited down here for this. But now we need to build our way back in. But the reason for showing this is just to see this particular rally here. Now it does look like there could be one more little move up here if I take that spike on board, because here we can see 1, 2, 3, 4, 5 here. So it's possible that we can have one more little move to the upside here, but I wouldn't get too excited about that. But anyway, just to show that we're looking at an ABC rally, and that's sort of fallen into place now. So with that in mind, we should see further downside into wave 3, and most stocks are the same as well. In a lot of cases we've got this up here as wave 2, so coming into wave 3 coming down here, and then this one here, so we're in the third of the third. So eventually these markets will start picking up speed to the downside. Okay, so for some of these stocks have had earnings, as you know. Even though that some of them were positive, like Facebook, 28 billion to 30 billion, it was still only 7% up on the previous year, which was one of the lowest it's ever had for a long time. So it's kind of, I see this sort of buy the rumor, sell the fact type of situation, and that would suit the wave count as well. So in this move here from the top here down to the low here for Apple, we can see that the 61.8% is really on close to 165, and 165 is part of minor group 2, 65, 72 and 80, making a nice resistance there, and we can see it playing a part now and again within this structure in this larger correction here. But all things said and done, if we're on the right track, we should have a strong third wave down here, and this will have 5 waves in it. So the first wave down, and then the second wave, we really need to catch the third wave. So that will be the third of the third of the third at that point. That's the one that we really want to get. Okay, so yeah. Is it possible to call a low in here, you may ask? I suppose we could look at this, bring this C wave up to this point here and try to figure out, you know, 1, 2 here, 1, 2, 3, 4, 5 for the third wave, fourth wave and fifth wave, and be done here. But I'd want to see a nice classic trading levels pattern sitting on the 165 in that case. So you'd need something quite strong at that point. So if that's the 165, I would want to see a pattern like this here, and then I would look for my entries coming down from the top with long trades. I know with long trades people like to buy the dip, but that can also get you into trouble as well. So unless you're you know, unless you've got that some technique that's you know, that gives you an edge, then coming down from the top is a little bit safer. Rightio, so I think that we're on 100 ticks on this. Let's go in and check on this. So what do we need here? 5k enough? Yeah, so in this case, just wave 1 here, 2 here. So now we're in the third wave, and in the third wave we've got 1, 2, 3, 4, 5 here for 1, and then we're going back for 2. Now I've looked at this here, and I can see that it can be counted as in different ways. So I'm not going to go into it. But what I wanted to talk about is the trade side of this. So we've had a position here and here. We've been stopped out here for this, and yeah, so this move, I mean, really this should probably go over here, which also changes the count. But then you'd say, well, Pete, that's the low there, you know. But I like to stay within the traffic for these sorts of things. So an A wave, a B wave here, and some sort of wave 1 here with an ABC for 2 here, and then 1, 2, 3, 4, 5 here, so 4 and 5. Maybe there is another little move up there, or maybe we need to put this as a WXY. You know, that it's a little bit confusing to me. So it's basically I can't see it, so it's not helpful. So what I'll do in that case is that I know the 162 is quite important. I won't go into that at the moment, but what we want here is to get short here is we want a classic trading levels pattern on 162 to the downside. So we make it something nice and clean like this. If this was 162 here, the market needs to come down. It will probably bounce off it, go through it, go back and retest it. You'll have your reference point low, so you can go short at that point. You may be able to get a second better position in here as well. It might get a little bit more complicated than that, where it comes back above the level there. So as you're moving up into this space and it pops back up above the level, then you need to rinse and repeat the process. So when this move comes down here, it'll be like this here. There'll be a bounce off it, so there'll be a bounce off here, going back up, and then there'll be the first low below the level again. So this whole pattern here will be wrapped up in this smaller pattern here. Okay, but what it will do at the end of the day, it will give you another low in here. It will also give you another low in here as well. And if you read price and volume, you'll see that the volume coming up in these legs here will be lower than the previous one. So that's also an indication that you could probably sell at the top there. If you could see, you understand that the volume moving up here is lower than the previous downtrend here, because corrections are on lower volume. But you would need to be able to read price and volume, which is not a big deal. It's pretty simple. There's a video on our website. It's a bit old, all our videos on our website, but they still get the message across, you know. Yeah, that's what we'll look at there. I don't know if there's going to be another move up there. This box is at 50-60%, so it's going to sit there for a while. 165 is the lower end of group 2, so I know that's going to be important there. So we want to build in here, and then we want to build in on 160, get another little move in here, and then we'll just chill for a little bit on this, okay? Because in a way, we need to get, if I can copy this, basically we need to get wave 1 down here and wave 2. We need to navigate that in a way. It's not so bad if you're not using leverage, but if you're using leverage, it's a bit of a tricky thing, because wave 2s can go back up 50-60%. So once we've got that, if you know, you could sell in the box, but don't overdo it, you know. And if you sell in the box here, the stop would be if you got a classic trading levels bullish pattern to the upside, so the arrival, the reaction, the first high above the level, the ABC pattern here like this, and then you would put the stop either on above the top there, but if you want to refine it, you can put it down to this one here. So that's where the stop would need to be at the end of the day, because if it was going to go down, it would just retest that and move down lower, and you can also short that in there. So you may be able to get a position here. If it goes up through to here, you can work this top there. Once you understand what you need to do at each price point, and you can do it at any price point. But anyway, we've got plenty of time, and like I said, this when we get this wave 1 down here in 5 waves, then it'll probably sort of mirror that, but probably a better job. And then we get the ABC pattern here for wave 2, then we can be selling up at the 61.8% mark, and we can start building into the side here and all of those sorts of things. So yeah, and that could see Monday come down pretty, you know, if let's just assume that we get some sort of top in here and we get an impulse wave down here in the next session and some sort of rally here, that's going to leave Monday really exposed. And that's kind of exciting really, because we're going to have the third of the third of the third here. You know, this is where it could really come down hard here. Probably, you know, call me wrong, but I think if we, you know, I mean, luck is preparation and opportunity meeting, and if we're prepared for that, well, then we can be, you know, be some lucky bastards for a time, you know. So yeah, that's that. Amazon here, the same thing as well, wave 1 and 2, and 1 and 2 here, and Yeah, I think, you know, we can look at this as a bit of an A wave, a B wave, 1 and 2 and 3 and 4 and 5, a little bit more of an effort to the upside. But, you know, even if we don't get this right here, we'll sell in the box. And if we get a classic trading levels pattern on the 3000, well, then we'll have to get out at that point, okay? So that would be okay at that point. And yeah, our main focus is once we've got this wave 1 coming down here, which will probably, you know, this will be an ABC up here, so this will be pretty much 5 waves back to the old lows here, and it'll find some sort of support here, and then it will come back up for that wave 2 there. A bigger version, a slightly bigger version of this one here. So you got the A, the B, and the C, and when we went short here, that's what we'll do over here. But we'll keep hitting it all the way down here, but try to manage that risk the best we can. Yeah, so that's the plan, Sam. And Google. So I've made a mistake here with this, and I didn't want to change it without talking first. So yeah, I'm just not getting it here. So basically, in a nutshell, few things have got to be moved around. This has got to be moved up to here. This has got to be moved. This has got to be moved up here. I'm just going to remove these out of the way here. Come on, there we go. So that's going to have to go in here, and this is going to have to go here. This is have to go in here. Could probably use these over. Oh no, another degree higher than that. So we'll need these ones. Don't think I can put it as a wave 1 like the other guys, so it doesn't sort of fit like that. Do I have any other? So what we need here is a wave 4 here, and then a wave 5 down here for that. So that's where that's going to be. These guys here. So we're not stopped out on this one here. So yeah, so the A wave, the B wave, and it looks like there's another little move to the upside here. So we could look at this as wave 1 and 2 here. So so these will come in handy now. We'll look at that spike as 1 and 2, and then 1 and 2 and 3 and 4 and 5. A little bit dodgy in there, but we'll just soak that. Look, there may be a top in there. There may be one more little move to the upside at 2, 4. That's the 38.2% retracement, and also to this, all of this consolidation here, that's going to make great resistance for over here as well. So I'll just draw that line in there. So on the short side here, if we use the 2350, right, and look for a classic trading levels pattern on that, and look to start shorting at that point. Just move these out of the way. One, two, three, four, five. It looks kind of good there, but I can't sort of see in here either for that. So anyway, sort of look, I wouldn't be surprised if there's a top in there. Okay, there may be one more little push, I don't know. it's a bit hard to see. I'm on 5 ticks as it is. It's a bit hard to see inside this thing. But anyway, even as a way forward, so basically we want to look for a classic trading levels pattern sitting on the 2350. So you know the routine, whatever happens, there'll be some sort of bounce coming down here, some move through here, some rally, and then down again. And of course we want to add to that under here as well. So that's that at this moment. Just want to check. Do I need to go down to that? Oh, just in case. I know that's 5 waves there, but that's okay. Just want to see the length of that, just see we're in the same boat. Okay, we're a tad longer than the 3rd wave, but with Elliott, if because normally if wave 3 has got the extension in it, then wave 1 and wave 5 will be the same. But if wave 1 and 3 are the same, equal, then we can have an extension in wave 5. So I don't know about that in this case, but it would take us down to this. It will be pulled to this number here, the 2000, and it'll be a bumpy ride through group 1 of 1, 2, and 3 here, and all of that. But anyway, let's just see how we go with that. And Facebook, so it had earnings as well, and yeah, so I don't know about this count, but I think it's sort of it's okay for the time being. I can see that I can count it differently as well, but you know, if the rest of the market's going, I mean, I could see first of all that I could put wave 5 in here and see and be done here, you know. We had another way of counting this a little bit sort of different. You know, we could count it like this as well, with an A wave here, and A, B, C, D, E here for the B wave, 1 and 2 and 3 and 4 and 5, just to keep it sort of simple. But look, if the rest of the market's going to be going down, then you know, I'd need to see a lot more here before I went bullish, and also too, you know, these things would pull back as well before they went up, and would catch them then. So we you know, would get our timing right. But if the rest of the market's going to be going down, then we need to look to go down with it, you know. So once again, wave 1 here, wave 2 here, and that would put us roughly in that 61.8% mark here for this. Pretty close, so we can expect this to top and turn now and move down into wave 3, which will probably take us into 150, and then will be wave 4 and wave 5. So it kind of puts it on the same track as what we've got the rest of the markets looking at. But yeah, we always got to look at both sides of the market and stay flexible. And you know, it's the analysis is a little bit sort of tricky. Trading is making money is more important. That's number one. The analysis just helps support us. Elliott just helps us support the direction of the market, you know. So the trade setup, the direction and the trade setup, you know, are the most important, and the Elliott kind of supports that direction that we're going in, and so does the volume. But the analysis is not always right. So it's always a bit of a subjective guessing game. It's all easy in hindsight, but anyway, enough waffling. Let's cruise into the 100 area through here. And we talked, you might have got a better stop here because, as I mentioned yesterday, with Amazon and Apple, I think it was, that that we tightened up the stops because they had earnings coming out, and I didn't know about Facebook earnings, but so maybe you know, I said to tighten them up as much as you possibly can. So maybe you've done that. I'm not sure, but we're out. I need to look at this as 1, 2, 3, 4, 5. I just mentioned the 50-60% retracement levels here. If we get a classic trading levels pattern, bearish one on the downside here, we'll need to look at this as some sort of ABC pattern here. So we need to look at, hopefully we get something nice and clean like that across the major level. But it's either that or we get this one here which will come back through the level, come back up again and so on. But you need to be looking on the short side from that, work that number there for that. So so if it comes through the level like this here, then you look for the low, wait for the low, don't go chasing it, and then you can lift it up to the second low in there as well on all of that. This move up here looks like this will be some sort of A wave up here, B wave here, and C wave here. It looks like it's got 1 and 2 here. I can see I can call the top in there, but as a third wave in here. But yeah, just give it a chance, see what this is here. Yeah, if there's going to be another one, it'll just be something like this, and then there'll be sort of some move down here. Be something like that. Can you sell up here? Sure. We can turn the box green if you like, but if you do that, don't over trade it. I mean, this, like I mentioned, this stock had massive earnings, but it was the lowest that it's, I don't know, ever had, but it was something close to that. Do you know what I mean? So it's definitely a buy the rumor, sell the fact sort of thing. So look, if you get a classic trading levels pattern here, then you need to look at that top there. Once it comes in, once you got it, it's pretty clear it's 1, 2, 3, 4, and 5. Now I could be wrong, and it could be 1, 2, sort of 3, 4, and 5 jammed up in here, and we just come straight down at that point, But yeah, I don't have to overdo it. If you normally trade, 10 shares, just get 2 in here, that kind of ratio. Do you know what I mean? So it's not like a, it's not like a big deal in that regard, Right, the same thing with Microsoft as well. So an A wave, a B wave, and a little C wave going up here for this. Let's just see what this looks like a little bit. Yeah, it looks like there's one more move here. If we look at this as 1 here and 2 here, all right? And then the third wave is 1, 2, 3, 4, 5 here. So it looks like there wants to be another little move up here, and then down. So you could look to do the same here as well. You could look to sell in the box, but do not overdo it. It's just for, it's just to gain a little edge in the trade further down. It's not to yeah, you just trading against the trend is the money's in the turn, don't get me wrong, but you don't want to be betting the house on it, yeah, and maybe leave the stop above the 300 up there at that point, or find the top anyway, on the downside here, we can look at why have I got that there? All right, there's a little gap there. So where's that? That's 296, 297, 290, 297. That would 297.20 or something would be a nice short if it made it to that point, And then you've also got this number as well, likes to suck it up there, but also got this previous high here as well, so it may just sort of get into that space there and fail as well. There's a few little things that can go on there, but we want to get short, so at this stage, if we look at this move to there, that would be the 38.2% retracement level. So this could just come down to that and then go up from that point. Do you know what I mean? So that's 288 at that point. Let's just see what other number. It's 288. Okay, well, we're going to use 287 at this stage, and you may be able to get a better picture than that. So I'll just bring this over to here. So at this stage, if the market came down from here, for example, then you need a classic trading levels pattern at this point, okay? At 287, you'll be safe at that point because it's moved down past the 38.2% retracement level for that. But it should just go, the stochastics is pulling back, so it should push up from that point, but just cover the bases. And also too, if it moves down through here, we want to be adding at the 5, so 285. So 285 here, add again at that point. You'll hit these lows and come back and bite you there again, but just hold on to that. And because basically what we're looking for here, once again from the top here, we're looking for the first 5 waves down here. That's what we'll be looking for, and then we're going to, and you don't need to chase them all, and then there'll be 3 waves back up at that point, and then it will come down, and hopefully it'll come down quite hard at that point, and we're looking to take it like that, or cross that B wave low, or if you've got 5 here, then you can buy the pullback in here, as long as you can identify those 5. If you can only identify 3, then don't take the trade, because you don't know. You need to know. You either know or you don't know, and if you know, then take action. If you don't know, don't do anything, and then don't get into the woulda, coulda, shoulda after that either. You know, you need to sort your shit out, basically. You know, the markets are good for that. So yeah, okay, well that's that. And you know, you might see something else, you know, pulling down, for something leading to the downside first, you know, some other market. So Tesla here, yeah, so anyway, an A wave, an A, B and C here for the B wave, and then 1 and 2 here. And in this case we're looking at 1 and 2 and 3 and 4 and going down for 5 for the 3rd wave, 4th wave and 5th wave coming down. So kind of at the end of all of this. How far it will come down here, I'm not too sure. All I can do is count the waves. I know you can do projections and this and that, but they send you off in the wrong direction most of the time, so at the wrong price. So we'll just keep tracking it to the downside. So we were looking at a bullish move and a bearish move. So the bullish move I've eliminated that, but I've come up with another one, which is basically 1, 2, 3, 4, 5 for 1, and then an A and a B and a C here on this low here. So we can have a look at that. I don't know which one I put it on. Was it this one or the other one? That's on the other one. We'll come back to this one. You know, I mean, I just, you know, because I just like to sort of, you know, I like to be prepared for things and not get caught out. So that's wave 1 and 2 here, and wave 2 was big here, right? So it was complex, because normally the complex, or normally wave 2 is simple and wave 4 is complex, and that's the guideline of alternation. But if wave 2 is complicated, then wave 4 can be simple. So is it possible we got 1 and 2 and 3 and 4 and 5 here for 1, and then an A and a B and 1 and 2 and 3 and 4 and 5 here? A little bit slim, but possibly. I mean, you know, but still, we if it pushes up past where it should go, well then we'll take a closer look at it. But otherwise, we'll just keep it in the backdrop there. But otherwise, we're looking at it like this, with 1, 2, 3, 4, and coming with this consolidation and the 900 here and all of that should play out reasonably well, and we should see wave 5 come down into here somewhere, wave 4 come back, and then wave 5 coming down like that, something like that. So a bit of a raggedy old ride to the downside, unless I've kind of got this wrong somewhere, but it's kind of a nice 3rd wave developing here, and compared to wave 1 here, I suppose we could look at it as more a bigger bearish picture as well, but anyway, we'll just work with this, and we're working with it on the 100 ticks. So yeah, from up here, we're looking down as 1 and 2 and 1 and 2 and 3 and 4, and down for wave 5, for wave 3, and then looking for wave 4, and then down for wave 5. The 38.2% retracement level is back on the 900 area here, and we could look at it as an A wave, a B wave, and then 1, 2, 3, 4, and maybe all 1 and 2 in here for 3, 4, 5. So that could be finished at that point there. Let's just, the wave A is a little bit small for all of this. 38.2% is there, so can't do anything at that point. What's that? 160. So if 160 becomes the resistance, we can short it at that point. I mean, it's a starting point, you know. We can do something under this level here for that. Hasn't really given me a nice 5-wave structure here, unless I need to put this wave 4 over there. That makes it a little bit better. Or unless we could look at this as an ABC pattern here, so an A wave, a B wave, and a C wave here for some sort of X wave over here, possibly. You could probably sell in the box here again, and but do not overdo it. Don't make it a full trade, otherwise, you know, because at points we'll get, you know, taken out on that. And so if we were going to have a stop in here, or we could bring this stop down, what we could do is look at it like this, the classic trading levels pattern. And I'm just going to put it on the top in this case, so we have to wait for that first high to come in here. And you know, it might be like, sometimes folks go, well, it just made a tiny little high just there like that. I don't really consider that the first high above the level. I'd consider that the arrival. So just be a little bit mindful. Look, you know, when something is simple, there's a lot of complexity behind it, and it takes a while to understand things. But the reason I developed the trading levels is simply to bring people's attention to the price, because professional traders have their own way and their own edges of doing things, but they will always say everything you need to know is in the price. But you know, really, what does that mean? You know, so it means, you know, means different things to different people, but the psychology and the price, I mean, just, you know, and most winning trading systems that I've seen they all kind of boil down to support and resistance, even though they can't see it themselves. So yeah, bringing your attention to not this current price, but these prices, these numbers, that's kind of where it's at a little bit, and then working out what support and resistance, what does that actually mean, and how do you confirm that with the volume, and, you know, working it that way. Anyway, Tesla, so that's that. And Square, the block. So last time we spoke, we were looking for this little wave 4 rally here. So it's kind of come in, and we're going to short it in that box there again. And then we're expecting it to, I mean, I don't know what all that is in there. Then we can look at wave 5 coming down through to here. So might come a little bit deeper, I'm not quite sure. It doesn't really matter where it comes to. Maybe it'll come to 90. Then we've got wave 4 here again. So we're just going to leave the stop out of the way for all of this, okay? And then we're going to, we'll see how far that comes down and where this wave 4 is, but we're going to also be selling in this wave 4. Normally they're a bit lower, so it'll probably, you know, try to pop its head up on the 100. 1 is the strongest number in the market, and then, you know, take it from that point. So we're doing all the right things. We're keeping the stop out where this market's not going anywhere fast, so we can, you know, it's like a snail, which is good, all in slow motion. So it gives you, that's why, you know, trend trading is easier than intraday trading, because with trend trading you can go to sleep that night and you can kind of digest what sort of happened, and you can look at all the different aspects. But when it comes to intraday trading, you know, it's sort of like you got to make decisions all really quickly. You learn much faster with intraday trading, and I think everybody should do it. but just do it with, you know, one share or, you know, one contract and those sort of things. And that money that you put in, expect to lose it. Just expect to lose it. Don't be disappointed that you've lost your $1,000 or 10,000 or whatever. Because if you're intraday trading, I mean, and you're not professional, you really, you know, if you got leverage that way, you need 20k minimum, you know, to get the numbers running right. You know, risking 1% of 20,000 would be $200, but you need to include the brokerage in that and slippage in that, and so, you know, you need to start building. But if you start with $1,000, you're not really going to make it, you know. A professional trader with starting with 5,000 could get away with it, or even 1,000. But you know, if you don't have that skill set, and money management is the last thing people learn, not the first, because it's boring. So the banks. See, I've got this. I'm not quite sure. I've got this pattern here, right? And then if I look at Morgan's, this one here, you can see this particular, I'm just going to bring this over here because these are the sorts of things I got to compare. So we've had that rally here for this, right? And then we've made new lows down here on this one, but on this one we haven't. We're above here. So I know that, well, I know at the end of the day I've got to line them up to all this wave 2 in here. So do I look at all of this as the B wave over here and put wave 2 over here, or do I treat them individually and so on and so on? So I've got them a little bit different from each other, but I think with generally the rest of the market, we're looking, and I don't know if even that's the right low here, and I'm a bit unsure about all of this. I don't know if that's the A wave, the B wave, and 1, 2, 3, 4, 5, and we're finished here, or we're going to go up a little bit further. I'm not quite sure about that, or is that the C wave there, you know, as an A and a B and a C? It's a little bit short. So a little few things here, but look, if the rest of the market's going to go down, this is going to go down, so we can put that here at 36.50 and look for a classic trading levels pattern at that point. Also look to add under these lows here. This is just a 50-60% retracement level from this previous trend here, just in case we need to look at it as wave 1 down here and wave 2 over to this point. I don't know, you know, and I've put the stop here because I don't want to get stopped out. So I'm not putting it there. I'm going to put it, you know, above this wave 2 here. So, you know, so it means that it's not there. It's not. I'm just going to move it out of the way. Basically, we're just going to allow it, because I'm not quite sure about this. I'm just going to let it play out. And this one over here may be a little bit different as well. So I've still got wave 2 here, and I'm going to look at this as wave 1 with an A and a B and a C here, and then come down from this point. So another move up to here, then come down. The 125 is the two important things here. First of all, we've got 120, then 130. They're the minor levels, and then we've got the sub levels. So the Fibonacci sequence says 1, 2, 3, 5, and 8 here. So this these sub levels of 1, 2, and 3 make up group 1 of 120 of the minor level here. If we get a tested support here, and it would be tested support if this top gets taken out, that means it's confirmed that it's come down, it's tested, and it's leaving it, you know. It's proving to you that it has that as support now. So I don't know if it has support, because it could just drop from here. If it drops from here, the 122 is where we're going to look to short that with the classic trading levels pattern. You could probably get a bit closer to that. You could probably get 122.50 in there. So we could put that in there. 122.50. I'll just turn that green. That will be easier for me. So that's green at that point, because if when you're talking about group 1, 1, 2, and 3, if the number 2 here becomes the retested resistance, then it's going to be pulled down to the 120 after this correction, and then the 120 here, once this is also the center of group 1 as well. So when this becomes the retested resistance, then the market's telling you it's going to be pulled down to this number here. So that's the beauty of group 1. So that's what we're sort of looking at this point. Could you sell in the box? I don't see why not, because I just don't think it's got the legs to go much further, you know. Thursday was the rally, so we could put that in green there. Like I said, just don't overdo it at that point. And if it goes up into the box, then you can also use the 123 here, which I'll put over here as the resistance as well. Once that becomes the resistance, add 1, 2, and 3 positions through this point here, and then add another one over here. So you want 4 positions in this stream here. And when you put your first one in, you want your 1% risk or 0.5% risk if your account's over 50,000, and then you know, and then manage that risk on each little step on the way down. A bit pedantic, but there you go. Okay, alrighty. Well, I'm out of here. Enjoy the weekend. Cheers.